What's going on, everybody? Welcome back to the channel. Today we had a crazy day in the stock market. If you watched Sunday's video, you were ready, and we've been ready for this week. So you guys can see here from the heat map, we saw a lot of things that were down really big from yesterday and leading into today. We had a big gap down and some more continuation on the downside today, which if you weren't ready, could have definitely really been hurting you after the strong uptrend that we had in the last few weeks. These past 2 days pretty much halved almost a whole uptrend. If we can see here on Finviz, things that hit new low today, 81%. Things that declined today, 71%. Pretty much the whole heat map, all red, apart from real estate, energy, utilities, consumer, and healthcare. Things that if you watched Sunday's video, should have been seen this coming. But if you like to learn about the stock market, the crypto market, make sure you subscribe to the channel, leave a thumbs up. It takes me a lot of time to get these videos out, and I do appreciate whenever you guys leave a comment or even just a thumbs up. Let me know what's up down in the comments down below. But let's get into the charts now. First, I like to point out here on Finviz, all our red things. If we go to our groups and our one-day relative performance, what do we see here? Technology, consumer, cynical, worst performing. Financial, communication services, also doing really bad, as well as industrials. So communication services, a lot of those are in technology, so a lot of times those two will move together. But what did really good? Utilities, healthcare, consumer defensive, and real estate, a lot of defensive type of stocks, right? And what really hurt the market today and this last couple of days, the stock market news, live update, stock tip as investors digest hawkish Fed remarks. So today, the transcript from the latest FOMC meeting came out, and a lot of the Feds were feeling more hawkish, as of course they need to battle inflation, so that it was to be expected. So what you see from SPY, we saw yesterday, since this with our arrow here. So on Sunday we talked about we're expecting a red market week this week, the stock market to go lower and potentially head down for these lows in the 430s, and potentially make this kind of inverse head and shoulder setup that we've been talking about to then push higher later into maybe next month or something like that. So that's what we're expecting. Now Monday pushed us right back into this resistance zone here that we had drawn out, and this was a pretty clear bull trap on Monday, and then Tuesday we got up into this resistance, got rejected super hard. We had a whole lot of short positions on Tuesday. On Tuesday we shorted the S&P 500, Apple, Microsoft, just insane amount of stuff we had shorted, and we held them through this gap down, and the whole chat room made so much money this week, guys. If you're not in the chat room, you gotta get in there. I promise you guys, it's definitely be worth it for you. People are just printing money in there. We had this huge gap down, covered all of our short position here, picked up some more short positions. Pretty much the market went all the way to 443. Then the Fed minutes came out, the transcript, somewhat mixed signals in there. We kind of finished up with the doji, still red on the day, but we do have a small gap here, and very important key here that we can see. Zoom a little more in. Where do we close under this key level? This 200 MA, which the bulls. If you're feeling bullish, you really wanted to hold this up. But now we closed under 200 MA. The 50 was just about to turn now. Right here, this green one was just about to turn. And the last thing that we do want to see eventually is if we see this 100 cross over the 200 and give us that death cross. We really don't want to see that, but we might see a rebound, maybe not tomorrow, maybe more towards the end of the week. We might see a rebound here to kind of fill up this small gap that we have here. This is where we got rejected. It's 449, so I would expect right now potentially a rebound, maybe a little gap up into that, into this resistance right here, fill up the gap, and from there, let me change to my brush tool, continue lower and kind of going for this bottom here on the 430s, and then I believe the bottom of this kind of next leg down here will be probably around the next FOMC meeting. We'll be anticipating what are the Fed's going to do. Are they going to raise interest rates half a point, a quarter of a point again? I think that it's going to cause this kind of sell-off in this area here to then kind of cause another bottom and starts rising higher. But I don't think we're going to get a clear direction for too much in this year. I think this year will be a lot of choppiness, a lot of investors not knowing what the Fed's going to do, inflation, Just a whole lot of things going on, of course. So we might see a lot of choppiness going into these years, and we've seen it so far. And if you wanna if you wanna track how choppy this market has been, you gotta look at the volatility index, the S&P 500 volatility index, ticker symbol VIX, and it's still holding this uptrend here. We bounced on this trend right here on the uptrend. Trying to push higher. We did kind of have a pretty ugly wick here that got rejected on this 100 MA. But still looking to probably push higher. And as long as we're over 20, volatility is going to be high in the stock market. So we got to be aware of that. As long as we're anywhere between, really the 20s, 19 to 20s, that's going to be a high volatility market, and we're seeing this pretty much every single day. We see this huge moves from this pie in either direction. If we zoom in on the hourly time frame and we look at it, and the hourly time frame is a really good time frame if you're just trying to learn and want to take some slower trades. You can see that we dipped up yesterday, strained resistance, and then could just short it on here and pretty much found some little bit of support on 100, but we gapped below it. You can just see in this hourly time frame, just if you look at some of these candles, you're making within the same hour a high of day into a low of day within the same candles, which in a usual market you don't see that too often. But whenever the volatility is high, the VIX is high, you see this kind of moves. And of course, if we take a look at our triple Q and we go to our daily time frame, got hit harder than our S&P 500 because it's just tech, and tech got hit the hardest today. And if the Feds keep being hawkish, tech will keep getting hit harder and harder. While S&P 500 does hold much better because it does have a lot of these other, real estate, healthcare. Even if it is a smaller percent of it, it helps it hold better. But the biggest thing here with the triple Q rejected, you see twice, it tested twice this 100 MA, and now we're seeing that cross, this 200, this 100 crossing below 200. You just don't see. No, we just see this going lower. And potentially kind of like the triple Q, we got these lows here making an inverse head and shoulder, but more likely we might see tech could go a little lower than the S&P 500. Because it's been getting hurt a lot more when we have these sell-offs. Well, we did have some symbols today, some tickers that actually had a really strong day, and we understand what the tickers are. So tickers that make a lot of money are gonna do well in this type of environment, right? So when the interest rates go higher, and it's always easy to borrow money, companies that have positive cash flows, have strong cash flows, are going to be doing well. So investors are rotating into this. Now we're seeing here Walmart pretty much breaking this all-time high level, strong breakout above, and it's just been up on a rocket these last couple of weeks. Because a lot of these investors are deciding to say, hey, interest rates are going higher. Why am I still invested in these growth stocks? Let me start investing into some stocks that already have their own cash flows. Walmart being one of those. Johnson & Johnson, another one that had a strong breakout here, kind of double topped earlier this week, or actually it was Friday, and then now today finally broke out this all-time high level. And this is a really strong move up here that definitely keep an eye to see if both on Cost and Walmart, if we can get a retest of the breakout to then keep going higher. We're looking for those type of trades. Another really interesting thing, if we do look at the oil, if you look at US oil, the WTI crude oil, we talked about it on Friday or Sunday's video, that this is getting tighter and tighter. If we take a look at the oil and we draw up these trend lines, what do we see here? We're seeing oil just had this strong move up, right? Let me lower this a little bit. You're going to lower this to about here, kind of where we've been bouncing off, on this top of this range here. But we had this strong move up, and now we've just been consolidating, getting tighter and tighter, and this is for sure going to have an explosive move. Now is it going to go up or down? These type of patterns usually are 50-50 type of patterns. If we base it off of the trend, we've been on an uptrend, so we might more likely to be up. But with this kind of triangle, symmetrical triangle patterns, you do want to wait till the breakout. And if you want the safest entry, you'll wait for the breakout, retest, and go higher. Or here, you wait, retest, and go lower. Whichever way to do it, but it's something that you make sure you're setting your alerts. U.S. oil over 100 or under 95. Those are going to be my alerts that I have set. Because you got to keep an eye on the U.S. oil, where does it want to go, because I'm telling you, when price expands and then contracts this tight, it's looking for another move up. If we take a look at XLE, very similar here. XLE looking like it's gonna wanna, if we drag this right about up here, and it's kind of making this like ascending triangle. Also a high and tight look that we're looking at here. That's when something pushes really high and kind of consolidates, on near the highs. Another one I think is potentially, if we getting tighter and tighter, gonna probably in the near future look for a breakout or potential breakdown. So that's something that I'm looking at as well. XLE. If we go to gold, gold very similar to the oil. Be bouncing up on this range, getting tighter and tighter after the strong move up. We see that had a strong move up, and now just getting tighter and tighter, looking for the breakout. And kind of like gold, kind of had this little high, really high here, right here, and then you have this low, a bit of a expanding triangle there. But another one that we might be looking for a breakout in the very, very near future. And we know gold loves its triangle patterns. As you can see here on the daily, we had this massive triangle before we finally had this really strong breakout. So definitely looking at both of those, all distress symbol, XLE, gold, and oil to keep making stronger moves either to the upside or the downside. We'll trade either way. We just want to see the clear direction. Where are we going with this? Next up, let's take a look at ticker symbol IWM, the Russell. Another one that we spoke about, and I was telling you guys about. Really easy to short here. We had this rejection here in the zone. We'll reject also for the 100 MA. You guys can see just 100 MA being so powerful, both on the IWM and on the triple Q. It's been the strong area of rejection, now kind of falling more, and you can probably look for this for sure. In the mid 195s down here. If eventually this falls through, this IWM can really fall, and it's something that we've been looking at for a while. If this really probably drops the 190s or even this double bottom right here, it definitely be something that eventually I'll be, if it does want to go lower, I'll be looking to short down to 170, 160 around this small range here. The IWM really look like a, if the Feds keep being hawkish, you might not be able to hold. That's probably going to be the IWM. If the Feds are going to be hawkish, it's probably going to be the first one to go, even more than the triple Q or the Nasdaq. And the SPY is going to be the one that's most likely is going to be holding up the best. Real estate ETF, another one that we told you guys on Sunday. We just gave out so much good plays on Sunday that we just saw this inverse head and shoulder here play out. I'll break out above it, and this now doesn't seem like he has much room left to go into these 52s here. We might get some consolidation, firmer push, because this does move slow. But it is something that I gave you guys on Sunday to keep an eye on. If you did catch it, great job, good job, on charting and everything like that. But I would like to see this too. Potentially, if it could come down to retest for a 7, that could also be really nice, because we do have a gap down here, and then push higher. Maybe get a back test here if it does what to give it. Then financials. Let's talk about financials. Still struggling. Fill this gap here, which I do like. We're looking for an inverse head and shoulder setup here. We were looking at it, but we're being cautious with financials. We're still waiting. I like how you fill the gap, found some support, might see a bounce here, but what we're seeing here is this stack of MAs. If they all start crossing below, it might get rejected right here on the 38 and next. And with the sector fund ETFs, they do move slow, but if you do trade the top tickers from these sectors, you will see that you probably find some better gains. So you simply have to look up XLF, top holdings. You know, you find the JPM, Visa, Mastercard, Goldman Sachs, all those, and you trade those. You know, you go to XLRE, same thing. You go to XLE, you find all the energy and all those kind of things. And keep in mind that with XLE, they do hold a lot of oil. So XLE and US oil, they could both be breaking out at the same time. You know, we saw CVX, which is Chevron Corporation. If we take a look at it, same thing, just holding tight here. And, you know, either way this is going to go, you know, it's going to be explosive because price has been contracting so much, you know, and really getting tight here, where at some point it's going to have to decide where it's going to want to explode. And, you know, keep in mind, there's a lot of people eyeing these setups. You know, you're not going to be the only ones eyeing it, so we might even see a little pump fake like this, or, you know, maybe even the opposite side. So if you do want to be safer, wait for those back tests, the retest of the breakout levels. Maybe have my plan is to, whatever side we break on, get a small starting position. Then if we do this retest, you know, I have allowed to do more, or if we fail it, I only had a starting position, right? So I have some skin in the game. And, you know, if it does continue up, I don't feel like, you know, I messed up my trade and I didn't get in. You know, but if we do get the back test, I'll get to add more. And, you know, of course, respecting my stop losses. But that's kind of my thoughts going into it. I know we spoke about Tesla. Tesla, another one that we saw fill up that gap after, you know, kind of breaking out this flag, double topping, filling the gap, and kind of built another gap on the upside. But probably looking at I like Tesla, just like I like the SPY to fill this gap and then kind of move lower. You know, hopefully we'll get to see that. You know, I haven't seen the futures just yet. It's a little too early to see futures, but that'd be what I'll be looking at. Fill the gap, short up there, and look for that gap down. You know, respect your stop loss as always, and, you know, that's kind of the place that I'll be looking at. Another big play that I'm looking at that I was watching, a friend of mine from the chat room pointed out to me, Brody, he mentioned this $100 mark being so strong on AMD, and it's definitely something we'd be looking at. I think if, you know, this 100 falls eventually, you know, maybe a little lower, you can draw it. You know, we do have definitely room to 95, and, you know, it's maybe even lower to 90. You know, we've been very heavily shorting the semis, both AMD, NVIDIA. It's something we've been very short of. You know, even if we go to Marvel Technology, I did forget about TSM. I didn't mention it in the chat room. Shorting TSM actually ended up green. It's been one of the stronger ones, but, you know, we've been shorting a lot of this semiconductors. You know, you can go ticker symbol SMH to see the semiconductor ETF as well. So that's all for me. I'm going to give you guys a mid-week market update. Since, you know, it's been a crazy week, I was like, you know, let me give a mid-week market update. I usually don't do this, but, you know, it's volatile times, you know, so I got to make sure, you know, everybody's safe out there. Everybody's making the right trades. Everybody has a trade plan. We're not just, you know, either FOMOing or, you know, even panicking. There's no reason to panic. On the red days, you know, we completely kill it in the market. There's ways to make money no matter what. So, you know, if you're a day trader, you know, you always want to take advantage of all of this. You know, as always, guys, thank you for watching the video. If you learn more stock market, the crypto market, make sure you subscribe down below. I really appreciate it. We're almost at 6,000 followers. You know, let's get those numbers up, guys. You know, these are where you get your content education from. It is free YouTube videos. A lot of people always ask me, how do I get educated? Watch these videos, take notes, and subscribe to the channel. Turn on the notification bell, do all those kind of stuff. And I'll see you guys in the next video. Peace.